Alright, good afternoon everyone. Today is February 4th, 2013, and we are going to go over all the trades that we took in the live trading room this morning, and actually we're going to go over what we did on Friday as well. Okay, let's start right out with the results on Friday. Okay, the results on Friday, we had plus 19 ticks in gold and minus 8 ticks on the crude oil. It took us 4 minutes to make our 2 points. It took us 4 minutes and 2 trades to make our 2 points Friday morning. Today, the results, we are plus 15 ticks in crude oil and plus 22 ticks in gold. It took us 5 minutes and 1 trade today to make our 2 points, or a 2-point equivalent. Okay, when I say make our 2 points, what I mean is make $100 a contract. 2 points on the ES is $100 a contract. It's a 2-point equivalent. Okay. All right, those were the results for today. We took a Russell trade today that ended up being break even. We missed a ton of trades. We pointed out a bunch of trades. The trades that we took though ended up with we're plus $370 on the day, $370 per contract on the morning, and we really got those out of the way early. In the first half an hour probably or so. All right, you can see right here. The NQ is making a big run down. At the end of the live trading room this morning, I had circled, where did I circle? I think I had circled over here is where I had circled, I think. Right in here. At the end of the live trading room, I think it was right in here or something. Maybe even been right in here. This one would have stopped you out. If it was this one, it kept going down. But there were many more opportunities in there. During the break, the markets really seemed to let loose once the European markets closed. All right, those are the results. If you've not taken a free trial with us, go to www.cfrn.net/apply. Sign up for our free trial. In our free trial, you get 5 days in our live trading room. You get access to our indicator set. You'll be sent an email that says how to download the indicators, how to download the charting platform. Guys, if you take our free trial, if you sign up for our free trial, take the trial. Don't just sign up for it and come back to us a week later and say, "Oh, I signed up for it, but I couldn't make it in." We allow the free trial 1 week every 6 months. If you sign up for the free trial, take the free trial. Take the whole thing. Download the indicators. Don't come back to us 2 weeks later and say, "You know what, I took the free trial, but I didn't download the indicators. Can I do it again, and this time I'm going to download the indicators?" That's not fair to us, and, it's not fair to you. Take the free trial if you're going to sign up for the free trial. If you're not going to do it, don't sign up for it. All right? Let's see. So, I was saying, to take our free trial, you go to cfrn.net/apply. Sign up for the free trial. All right. We give you everything in the free trial, everything but access to the members area. So, and access to the partners meetings. But everything else you get. You get all the indicators. You get to sit in our live trading room, see us put the trades on, see us take the trades off, see us talk about the trades. All the pictures that we make, you get to see us make them, and you get to get copies of them. All that sort of stuff, right? It's definitely worth your time if you want to learn how to trade consistently, make money profitably, make money consistently, trade profitably. That's what I mean. In any of these markets that we trade, okay. So let's get on to the trades now, okay. Hang on, Alan. What setup do you look for to get back into a trade once you exit with a profit and the downtrend continues? You would look for let's find one. I'll show you one. Right over here. Okay. Here's a trade right here, and this is on the NQ. Okay, this is on the NQ. You have bearish divergence right here, and I have another picture that I made today. Because we have one set of indicators, and really, I say we have one trade setup. But if you look at, when it fails to come all the way back to the BBC and then you close down below the trend line, I suppose you could call that another trade setup. But it's really the same setup as this one right here, if it shows up, is this one right here. It just fails to come back and test the BBC. All right. What you look for is this. You look for the bearish cross, price to pull away, price to attempt to pull back up. The cycle, you got to have your divergence and all that still. Usually in this case here, usually by the time it closes below the trend line, the green line is going to be going in your favor, usually, but not always. Okay, and what you look for is the close down below the trend line. Now, this right here is exactly what happened over here. 3 times in a row. Okay. The original trade was right here. It pulls back. You get your bearish cross. You tested the BBC with a down close, but you don't have any divergence on the down close, right? There's no divergence there, so there's no short trade. Then price goes down, but it's got so much momentum that it doesn't pull back and hit the BBC. So right here, you draw on your little trend line. You have divergence down here. You wait for your close below the trend line, and you jump in. Now, if you took profit on that, and I'm saying this because there was a question. The question was, what setup do you look for to get back into a trade once you exit with a profit and the downtrend continues? And this is a perfect example of it. Now the next one, it pulls down here, and look, you can draw another trend line right here. I didn't draw the trend line, but you can draw another trend line right there. All right, you have bearish divergence again. You get a down close below the trend line. You can jump in there again. You could have done it again right in here. Okay, right here. And again right here. All right, any one of those. 1, 2, 3, 4 of them right there, right in a row. And then the fifth one turned around and went back up. So if you had an 8-tick stop on this, and you took, say, 10, 15 ticks profit on that one, maybe 8 ticks profit on that one, maybe 8 ticks profit on that one, and maybe these ran right into each other. So maybe you took 8 ticks profit there, 10 there, even 4 there. You're looking at 20-something ticks profit there. Then you get this one that loses 8 ticks. So you're up 16 ticks profit between these trades right here, and that's being conservative. And then it continues. There's another one there, another one there. Changes directions. Then it continues again. Now those weren't any of the trades that we took in the live trading room this morning. This morning I've decided that, since with all the stuff that I have going on, with the family stuff that I have going on right now, I wanted to get the 2 points out of the way as quickly as possible this morning, and and for everybody that's in here who's a partner or who's on the free trial, I may try to get into the live trading room early tomorrow in the pre-market. We don't have any news events. We didn't have any today, and I don't know about tomorrow. I don't think we have any significant ones tomorrow either. So the majority of the action is likely to be in the first hour or so. This was the second picture that I made today. Now there's 2 different ways that the trend lines come into play. This and this. This was the trade that I took, the first trade that I took in the live trading room this morning, right after the open. Price came down, tested the BBC, and when it tested the BBC, the cycle was red, so you need to close above the trend line. Once we got to close above the trend line, I entered and I took profit at plus 10 ticks right there. That was the equivalent of 2 points. Okay, Alan, I'll send it off to you. Just send me an email, okay? If you want it, just send me an email saying screenshot, please, and I'll send it off to you. That was the first trade that I took. That got me the 2 points. I could have stopped right there for the morning. If 2 points was my daily goal, and I was just your average trader, or your normal trader guy who had a 2-point target, I could have stopped right there after 5 minutes. Because I'm always in there teaching and training, we kept going, and we took a trade here that didn't go anywhere. We got break even on that one, and we took another trade right here that dropped down 5 ticks. We took profit on. So that was all my trading on the crude oil this morning. We identified more trades as they happened, like this one right here, over here. This one right here I said I wasn't going to take because the black line got too close to the green. Over here was a shorting opportunity. Over here was a shorting opportunity that would have stopped you out. It stopped you out just about to the tick, then it came back a little bit, went back and forth a little. But there was more opportunity right here. All right. And you would have needed the down close over here. It would have been this down close right here to get short. All right, and that was the morning on crude oil. Okay. Let's see. I'm going to go to the Russell next. Okay. Now I made a recording this morning. I think it just finished converting. I made a recording this morning during the live trading room. And I'm sorry. In the recording, I went over a bunch of the stuff about drawing trend lines and all that with in a live market. I was drawing the trend lines in a live market, and I was explaining the trend lines as I drew them. So I think there was a lot of good information in there because some things happened in that time that we get questions about a lot. Like the black line and how to use the black line and things like that. The black step line right in there. Now this is gold. It looks like I only marked up one of my trades on gold here. Yeah, it looks like, oh, this isn't gold. This is the Russell. Okay, whew, good. All right, I only took one trade on the Russell. When we tested the BBC here and gave an up close, I went long. I think I went long at 904 even. And once it got up here above the BBC, I moved my stop to break even, and it came back and took me out at break even. Then it moved up 8 ticks. Okay, it did go all the way up to the zone, then it came all the way back to the other zone. Now, these little yellow arrows here, when I blow things up, the arrows stay in place, so the arrows are a little out of sync right there. But on the way down here, there were a couple of spots where you could have shorted. All right, I wasn't following it that close because I was trading other stuff. But that was the Russell. It's all the same stuff. Okay, I'm going to go over to gold now. And here we are on the gold. Here we are on the gold. All right. The first opportunity was right in here. There was bullish divergence. It was right at the open. There was bullish divergence with a close above the trend line. Could have gotten long on that one. I didn't. I waited. It pulled back down here and gave an up close right here. I jumped in on that one. And I don't remember. I think I took 9 ticks profit on that one. And then there was another opportunity right over here. And this one was the standard off the BBC one, okay? All right, you have your bullish cross, you pull back, test to the BBC with an up close with your space, steps 1, 2, and 3, and step 4 is the bullish divergence, okay? That's what that was, right in there. And I got in on the up close right here, and I took however many ticks profit it was in there. I ended up with 22 ticks, so I think it was 13 ticks profit I took on that one. Let's see, the next one was right in here. All right, I didn't take any more trades, but these were more trades that set up, okay, as it was going along. There was an opportunity to get long in here, an opportunity to get long in here, and this is during the break now, but there was another opportunity, well, right in there, but by the time you got the up close, the green line was pretty much into the cycle. And that was pretty much it. That was pretty much it on the gold. Okay, so we ended plus 22 ticks on gold. All right. Yes, it means the actual close of the bar, the actual up close of the bar. Gary, I would have to refer you to a psychiatrist for that. I don't know the rest of the statement. Why? Let's see. I'm sure you're probably typing in the rest of the statement right now, but okay, I'll wait for that to come in before I make any more little jokes. Let's see. I'm a little punchy. Can you tell? Is there a way to calculate the close of the bar before the bar closes? Good question. Yes, there is. I'll go into that in a minute. I actually did go into that in that recording that I made this morning, I think. I think I showed that a little bit this morning. Oh, crude oil just took a dive. I don't know why. When the blue-red line crosses... I don't have anything for that. You're talking about the cycle? When it crosses up, go long. When it crosses down, go short. Okay. We've covered stuff like that in the past, but what I would say is on larger time frames, you really want it to have more room. When it gets down here, usually on the larger time frames, when it gets down below the 50% mark, usually the move is pretty near done, and when it gets above it, it's topping out and bottoming out. In the faster time frames, it may be a little more significant, but I think you're going to get whipped around too much. It's tough to put a bracket around that. Okay. Sorry about my earlier joke. All right, now on the NQ, using the same exact stuff. All right, the NQ had big movement this morning in the pre-market. All right, it really tanked in there in the pre-market, and then once it opened up, there were a couple of quick opportunities in here for a little bit, and then it turned around, and you would have been looking in here, bearish divergence. The black line got up above the green. This is a good example of when not to trade. The green line is in between the black and the MA1. All right. There was no opportunity there on the way down. Nothing here on the way up. Nothing here on the way down. See, the NQ was really messy until it got over here and it really started to trend. Then there was some good opportunity. There was probably, right in here, there was a little bit of opportunity on the short side. Okay. Okay, right in there. Okay. It should have gone down from there. Okay. All right. Let's see. And Kyle, I don't know, Dwayne, do you see that question from Kyle in there? I don't know what the number is off the top of my head. All right. Anyway, let's see here, guys. We have right here we have a close down below this trend line. This is the trend line that you would have drawn, okay? With the close down below the trend line right there, could have been something to short on. I probably wouldn't have done it anyway because the black line is so close to the green right there. Once it got over here, though, this is what I talked to you about a minute ago when I opened up with the recap right in here. A down close there, a down close there, a down close there. All those opportunities in there. Okay. That's pretty much the NQ on the morning. There was some movement on the soybeans this morning. Not a whole lot. All right. Right here at the open of the soybean market, there was this up close right here and this up close right here. This one went up, this one didn't. And this one went about a point. Not a point, about 3 ticks, which would be 3/4 of a point. Equivalent on the ES. It turned around and it came down. Over here you would have been looking at this, the same stuff, guys. Now this is soybeans, but you're looking at it on the same time frame. You're looking at the same exact setups, okay? That down close right there is what you would have been looking for. And now it's testing the BBC and giving a down close, but you would need a down close below this trend line. Okay. That is that. All right. Let's jump over here. The 6J, we didn't have any trades this morning on the 6J. I want to say we looked at it a little bit, but not too much. Really, I didn't look at it much at all. But natural gas was something to be watching this morning. We did watch natural gas just a little bit, but these were the opportunities in it this morning, and in the right after the open, those were the opportunities. Okay, and then once it got up here, I said, I think it's a little long in the tooth, and I would wait for a pullback down to the BBC. It got down to the BBC, but it had bearish divergence down here at that time, so you weren't interested in trading in there. Okay, that's it. All right, the ES. I'm sure a lot of you guys are interested in the ES and what it may or may not have had to offer this morning. There was nothing in here this morning, okay? We really didn't have anything going on in here. Once it got down into the weekly trading zone, there was one opportunity right here at about 11 o'clock, but it was inside the weekly trading zone, so I wasn't interested in doing that. You see we had the bearish divergence with the test of the BBC and a down close. There was another one over here, a test of the BBC with a down close, but you need to close below the trend line because even though you have some divergence, the cycle portion is blue, so you would have needed this close right here. And I don't trade the ES if I don't have 2 points between my entry and a weekly trading zone. Okay, so that is that. All right, I think that covers pretty much all the markets, guys. And I think I answered all the questions too. So if anybody has any questions, you can email us at support@cfrn.net. That's support@cfrn.net. Or you can call us at, hang on. Well, you can call Bert and Leslie at 866-928-3310. Okay, it's 866-928-3310. All right. With that, I'm going to wrap up the recording for the morning. Again, we were plus 15 on crude, plus 22 on gold. On Friday, we were minus 8 on crude and plus 19 on gold, I believe. Let me just check that again. I didn't speak about calculating a close. Hold on a sec. Let me just check Fridays to make sure. Yeah, Fridays is right. Calculating a close. Calculating a close. Oh, that's because I did it in the video. But I'll show you anyway. The kind of bars that we use here, guys, they're range bars. Every bar is 4 ticks in height. So if we look at this bar over here, we'll see right now on the natural gas. This bar, if we assume this is going to keep going down from right here, okay? This bar has a high of 33.48. That means it's going to have a low. If it's going to keep going down, it's going to have a low of 33.44. All right? 33.44 is the low of that bar. If this high of the bar is maintained. Okay? If it goes up one more tick, then you'll know how high and low that bar is going to be. Because you could still, like right now, you see the bar hasn't closed yet, and you know it's got a high of 33.48 and a low of 33.44. Then it ticked down below, and it was a close down below 30. It was a close at 33.44. Did you see how I did that? I was able to calculate where the close of the bar was going to be. The current bar has a low of 33.43. So if this low is maintained, then the high is going to be 33.47. Okay? If the low is not maintained, it's got a high of 33.46, it'll have a low of 33.42. And there's the 33.42. Okay? That's it. That's how you calculate when the bars, or where the bars are going to close, or sort of get an idea. Right? So basically, if you can handle adding and subtracting up to 4, then you can do this. All right. With that, I am going to wrap up the recording right here. Okay. If anybody has any questions, you can email us at support@cfrn.net. If you haven't taken the trial yet, go to cfrn.net/apply. And that's it.